Welcome back to Trading Bird. It's easy to get caught up in individual trades, but successful traders understand the importance of stepping back and looking at the bigger picture. Today, we're going to review the broader market structure, key liquidity levels, and the areas that could have the greatest impact on price action this week. Let's take a look. Before we jump into the calendar, I want to start with a simple reminder. Not every week is about finding the next trade. Some weeks are about understanding the environment you're trading in, and this week feels like one of those weeks. Last week, the market was focused on the Federal Reserve. This week, attention shifts back towards inflation data, economic activity, and the overall health of the consumer. So let's walk through what I'm watching. Monday is relatively quiet from a news perspective. And honestly, after a week like last week, that's probably not a bad thing. Markets often need time to digest major events. And sometimes those quieter Mondays give us clues about what institutions are thinking heading into the rest of the week. I'll be paying attention to whether buyers or sellers start taking control around key liquidity levels, but I'm not expecting Monday's news calendar to be the main driver of the week. Tuesdays get a little more interesting. At 10 a.m. Eastern Time, we'll get consumer confidence data. Now, I don't trade consumer confidence directly, but I do pay attention to what it's telling us. At the end of the day, the market is constantly trying to answer one question: how healthy is the economy? Consumer confidence is one piece of that puzzle. If people feel good about their jobs, finances, and the economy, they're generally more willing to spend money. If confidence starts failing, consumers may become more cautious. We'll also get PMI data. You'll probably hear traders mention PMI this week. The easiest way to think about it is as a snapshot of business activity. It's not usually the type of report that completely changes the market by itself, but when you combine it with everything else we're seeing, it helps paint a picture of what's happening beneath the surface. What will be interesting to me is whether Tuesday becomes a positioning day. A lot of times before a larger report later in the week, institutions begin building positions around important levels. That's something I'll definitely be watching. Wednesday brings new home sales data. Again, not necessarily the biggest report of the week, but still worth paying attention to. Housing is one of the areas that tends to react quickly when interest rates change. When borrow becomes more expensive, housing activity often slows. When borrowing becomes cheaper, activity tends to pick up. For me, this report is less about the number itself and more about what it might be telling us about the broader economy. Thursday. The report I'm most interested in this week comes out Thursday morning at 8:30 Eastern. That's PCE inflation. If you're newer to trading, you've probably heard people talk about CPI before. PCE is very similar. The difference is that PCE is one of the inflation measures the Federal Reserve pays particularly close attention to. So even though it doesn't always get the same headlines as CPI, traders watch it very carefully because it can influence expectations about future interest. And one thing you'll hear me say a lot on this channel is market trade expectations, not necessarily the news itself. The market is constantly trying to figure out what comes next. That's why reports like PCE matter. We'll also get core PCE, GDP data, durable goods orders, and weekly jobless claims all at the same time. One thing I've learned over the years is that many traders assume the first move after a report is the move. That's not always the case. A common pattern looks something like this. The report comes out at 8:30, futures react immediately, the market opens at 9:30, then sometime between 10 and 11 you'll often see institutions begin positioning more aggressively. Sometimes the first move continues, sometimes it completely reverses. That's why I try not to rush into major news events. Patience is often an advantage. This isn't a huge earnings week, but there are still a few names on my radar: FedEx, Micron, Carnival, Darden Restaurants, Paychecks. The one I'm most interested in is in Micron, not because I'm necessarily trading Micron itself, but because semiconductor companies can sometimes provide clues about broader technology demand. Sometimes earning reports tell us more about an industry than they do about the individual stock. As always, price comes first. I'll be paying close attention to the SPY and the QQQs. I'll break down the SPY. I'm always going to be checking for what? My monthly high, my monthly low. Then I'll move it down into the weekly. And then I want to see what the previous week's high was. And since it's so close to the monthly high, I'll leave this currently here and just know that we're into major resistance levels and we have so much liquidity sitting right up top of the charts here. The weekly low is going to be key for me because if it does break through this level, it appears that we have so much more room to the downside to the monthly chart, according to our monthly chart, where we're still within the previous month range. Now, I'm also looking for major fair value gaps. As we can see on the monthly chart, we have a fair value gap sitting right here around $600. Will the market tank on this week? I don't know, but there is liquidity there to be had. On the weekly chart, we have liquidity sitting right here at our monthly's low. So there is a fair value gap sitting there that this month we may see it grab before it reverses back up. We also have fair value gaps sitting below that one, where the market, if it does break below this sell side liquidity, it could continue here before it reverses back up into this range before taking another leg down. And what I mean by that is if this market does indeed come down and bounces here and bounces down to this level, breaking sell side liquidity, we can see it come into this level, maybe come back up into here and then continue. Now, this may not happen all in 1 week. This is something that, like I said before, could be positioning us for what's to come in the future. Every week isn't about finding the next trade. So we can be still looking at the charts, looking for a trade this week. However, we're not anxious enough to make an actual trade. We can be patient and wait for that outcome and wait for what we expect to happen if it does happen. We're not going to try to anticipate it happening, but we must be ready for when it does happen. Now, this is just one scenario. We can also see the markets just push through and create all-time highs. I'm not a fortune teller, but if it does happen, I want to be prepared for that as well. So those are the key levels that I'm going to be watching. Those levels give me a framework for the week. They don't tell me where price is going. They simply help me identify areas where reactions may occur. And if I wanted to get a little bit more specific, I can go down even to the daily charts to find out even tighter stops and even tighter ranges. Because as you can see, the market is starting to slow down a little bit, and we have been pretty much trading within a range. Most of the moves have occurred in the pre-market, also in the aftermarket, and traders have been left to work with just ranges. Most of the trending trades have taken place pre-market and aftermarket times. So if you are a range or a box trader, then I'm sure you've been having a great time in the market. But if you are a liquidity trader or if you are a fair value gap trader who is relying upon trends, it's probably been a little tougher time for you. So being selective with your trades is the best idea for you. Going into this week, I'm not coming in with the prediction. I'm coming in with a plan. If buyers continue defending support and we see displacement through liquidity overhead, there may be opportunities higher. If price sweeps liquidity and fails to hold, there may be opportunities lower. Either way, I'll let price tell the story. My job isn't to predict, my job is to prepare. As the week unfolds, remember that preparation creates confidence. The traders who consistently perform at a high level aren't predicting every move. They're preparing for multiple possibilities and reacting when opportunities present themselves. Now, blessings and peace, and I'll see you in the next breakdown.